Amid global supply concerns and rising fuel costs, India is doubling down on EV growth. Under the 10,900 crore PM Electric Drive Revolution in Innovative Vehicle Enhancement or PM E-Drive scheme, the government has extended subsidies for electric 2 and 3-wheelers. Electric 2-wheelers get a short 3-month extension. They will be eligible for subsidies only if their vehicles are registered on or before 31st of July 2026, while incentives for electric 3-wheelers, including e-rickshaws and e-carts, have been extended till March 31st, 2028. The government has also set price limits for vehicles to qualify for incentives. Electric 2-wheelers must have an ex-factory price of up to 1.5 lakh rupees. On the other hand, electric 3-wheelers are capped at 2.5 lakh rupees. In the near term, the biggest beneficiaries will be buyers, fleet operators, and manufacturers in the electric 2 and 3-wheeler segments. The extension helps preserve affordability for consumers. For companies, the move brings more certainty in planning production and investments. But a sudden spike in sales is not expected. Experts believe the extension will stabilize demand, not dramatically accelerate it. The focus on electric 2 and 3-wheelers reflects how these segments dominate personal mobility and last-mile connectivity. Also, they are extremely sensitive to upfront costs. That's where subsidies make the biggest difference. Experts believe that these segments are directly linked to income generation, unlike private cars, which are still largely discretionary purchases. And the data backs this. As of 13th of April 2026, around 87% of the electric 2-wheeler target has already been achieved. But for electric 3-wheelers, that number stands at just about 14%. That gap explains the longer support window for 3-wheelers. This decision comes during rising global uncertainty. Tensions in West Asia are increasing supply risks, while global fuel costs remain volatile. At the same time, India's EV market is expanding. Total EV retail sales increased by 24.6% to 2.45 million units in FY26. Electric 2-wheeler sales alone increased by 21.8% to 1.4 million units, up from 1.15 million last year. EVs are no longer just a climate choice, they're becoming a hedge against energy insecurity. The subsidy extension keeps the momentum alive, but it doesn't solve the bigger challenges. Charging access remains limited, battery costs are still high, financing continues to be an obstacle, and the need to build a stronger EV ecosystem is becoming critical. Experts say the next phase of EV growth won't be driven by subsidies alone. This is a fund-limited program, and subsidies will only last until the allocated budget runs out. After that, vehicles will no longer be eligible. For everyday users, the real issue isn't public charging. It's access to charging at home and workplaces. So the growth of India's EV ecosystem may not be defined by incentives, but by how infrastructure and affordability support scale. Follow Business Standard for more such stories.